or do you want to gain 3%? So in a risk-off environment, you are then likely to lose 20%.
Yes.
So you try to go and find your 3%.
Yep.
Versus in a risk-on environment, you can gain those 20%, but then you don't want to be buying 3%. Of course, you want 20. So in many markets, there is like 20 negative, or it's an Aussie market is either losing 20 or gaining 20, and you want to be staying away when you are about to lose those 20.
Yep, well said. Again, it's a focus on, do you want to protect money or do you want to try and make money? And the market's mood shifts greatly month to month. Ivan, thank you very much for coming on today. That's the end of our session. We got to hand it off to Chris Pulver, who's up next. But before we go, make sure everybody, if you have not already, go subscribe to Ivan. He has his own YouTube channel, puts out great content. And also, by the way, he is doing coaching calls within our group and working with lots of different members to help them reach their full potential. If you're struggling with the psychology side of trading, I would highly recommend reaching out to Ivan and ask him about his coaching offerings that he does. Ivan, thank you very much for coming on the call today.
Thank you very much for having me.
Say, man. Okay, guys. Yeah, we are going to continue the show. Up next, we got Chris Pulver. Let me just remind everybody who may have missed me say this earlier. The Edge Finder is our tool that we keep referencing to look at economic data and sentiment, and there's a million tabs here. If you want the chance to be able to play with this data yourself every single day and to help find better trade setups in the markets based on the macro, based on economic data, sentiment data, extremes can be extremely good opportunities to look for in markets. If you haven't already taken advantage, we're doing a 30% off discount right now. And for those who message in right now, you can do 35%. And we are offering payment installments for a limited time. So take advantage. If you're looking to split up the payment to take advantage of this discount so that you don't miss the opportunity while the price is low, send us a direct message on our website, speak directly with a support team member there, and they can get you hooked up with a copy of the Edge Finder at the super low prices that we're offering it at now. Okay, guys, up next, we're going to have Chris Pulver taking over the show to guide you on this crazy rocky market day. Stay tuned. Chris Pulver's up next.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. How we doing today? Actually, today's just fine. So is it a surprise? Nope, because we were kind of bracing for this on Friday last week. If you were with me for my afternoon session on Friday when tariffs started to hit, that's when the headlines were affirming that it's going to be February 2nd or February 1st over the weekend. And the market had a huge sell-off on Friday. I said, beware of the potential gap on Sunday night for futures market. And that's exactly what happened. I posted this in my Telegram last night. First thing I did is check my phone around. This is 6:17 p.m. Eastern time. You can see that futures are down. So there's S&P futures, there's Nasdaq futures, and down last night with a pretty healthy drop. And that's what we got this morning. So futures market was down and stayed down. Let me go into my futures trading right here. There we go. So there's your big gap from Friday to Sunday night. We're pretty much around the same price. And same thing here on Nasdaq futures. So gap lower, we're around the same level. So what's interesting is we haven't made fresh lows from the night. So we gapped lower, kind of poked those levels. You got to wonder if this is going to be something that the market can kind of hang out here with just a gap day and just kind of this own chop fest with the market like caught on its heels. We're down about 1.9%. Do we contain, right? NASDAQ is down. There we go. This should be closing out for profit here. Booyah. SPX for 260 for the win. Perfect. So anybody that's in my daily profit play, that's all I needed to see. And there you go. So nice little winner there. And I've got one other trade running. So 335 trading at 330. Going to hang on to that one for a second. So maybe do a quick update. Update. Okay, the other one needs more time. So that should be good. I posted two new trades in Pulver alerts this morning. I did a SPY trade and a QQQ trade. I like those quite a bit, actually. We do have higher volatility, which I'm totally fine with. Let's figure out how. Actually, I think I can get this trade posted this morning. Let me see. Yes. All right. Look at this trade right now. I'm going to go SPY. SPY. I don't have any expirations right now going into April. So the next one, I mean, these are going to get filled in eventually, but right now I've got an April 17, which is out 73 days. I'm going to look at a trade. Son of a biscuit. So I got to go 5 wide on the SPY. I may not be able to take this trade the way I want to, which is okay. All right, easy does it there, Price. Price is making a screaming comeback right now. Okay, we'll see if things just chill out for a second. I have one trade in here. SPX. All right, so I'm down about 60 bucks on that one. I just need price to calmly settle the heck down. Give me another 50 cents profit, hopefully. Keep an eye on that one. But I'm going to look at a trade out to April. I think the only issue is my spreads are not awesome, but let's see if I can figure it out. So if I go out to April, so the trades I posted in Pulver alerts right here under the index column. So I did QQQ and I did SPY. So on days like this, we have higher volatility. That's one of my favorite trades to go to. So I posted that. It does require some capital, so I would recommend if you're going to take that trade, you want to have a margin account. You want to have some cash available. If you don't have that, then don't take the trade. Okay, what the fudge, dude? What is up with this? We just had a $5 rip in the last 4 minutes of trading. Is there some breaking news that I'm not getting? Let's check out. There you go. Well, just like Colombia, Mexico's president is tariffs delayed for a month. Is that Mexico or is that U.S.? Looks like U.S. unveiled it. Mexico's retaliation is going to be for a month. Just freaking volatility, man. Crazy stuff. And then the market's like, hooray, we're not getting smoked by 2%. Market was down 1.94%. I still don't know if we're going to fill the gap today. That's a pretty healthy move. We'd have a 1+% gap. I mean, it's difficult for the markets to fill those gaps, but one little manipulation candle higher, and then the market fades and just kind of chops around. That's all I need for a little trade this morning on SPX. Let me catch some comments here. Okay, so I want to take a look at April since I don't have any expirations out to April. I don't love the strikes right now. Let me go to it might be easier to go to SPX, honestly. If I go weekly, as long as I can keep these 5 wide, this could be a pretty good probability of profit. The issue is I'd have to create a wide spread. So let me just take a look at this one really quickly. If I do, looking at like the 20 delta, so 25 by 20, and then I find a wider spread. So I go 5 wide on the debit spread, and then let me see if I can go maybe 20 wide and get a credit. 5,300. So if I sell that, buy that, so it's 50 cents credit. That's not a bad trade. No, these strikes are way off though. Okay, so I can go 30 wide. High enough probability to profit, 52.90. Shoot, I might not get. I mean, if I get filled for $1, that's okay. I get a profit trap on here, $5. But man, the bid mid ask is all over the place. All over the place. Okay, let's check SPX prices really quickly. 59. Where the heck's my strike? I think I did like a 60. 59.90. Son of a biscuit. So my darn it. Well, 335 needs to be 670. I think I might take a small loss on this one here. That is annoying. Okay, I'm going to close this one down for a small loss. 6 dot. So you got it here for $6. All right, it's got filled for $6. That's fine. Okay, let me see if I can get this trade in. So let me go SPX out to April. Okay, let's go SPX to April. Sorry, get back to this trade here. April. I thought I had the trades entered in. If not, I'll start from scratch. There we go. April 17th. All right, guess I got to start this whole thing over. So the positive thing is Qs are in, SPYs are in. I'm looking to get a trade for income. I'm going to look at SPX. April 17th, it's out 73 days. So a 25 by 20, which is a debit spread. And I'll move this way down here to like a 10 delta. See if I can turn this into income. So again, I like I said, the bid mid ask is pretty wide on this trade going out to April for right now, but I want to look and see what the percentages are. So if I sell the 52.90 or 5,300, maybe the spread's a little bit tighter, and then go, that's 20 wide. That's not a bad trade there. So max loss, profit trap, buying power is pretty tight. I don't mind that trade at all. Go a little bit wider. All right, let's see where 5,300 is on the SPX. So 5,300 is clearly way the heck down here. We'd have to have a pretty nasty spill. We'd have to drop another 11% on the SPX for this trade to be threatened and take any risk. So I'm going to try to take this trade hopefully for $1. $1. $1 credit. See if this will fill. So what's the buying power here? $2,000 for buying power. $1's not filling. Let's try 90 cents. I mean, the liquidity is a little light because I'm not getting filled. I'm not going to take less than like 50 cents on this trade, but let me see if I can get filled for 80 cents. $0.80 not filling. 70 cents, survey says. Come on, man. $0.60. All right, just got filled for 60 cents. This one I can take across the board. Let me see if I get filled for 60 cents on all these. Okay. I'll put this trade in Pulver alerts. Just give me a second here to get them all filled. There we go. Seven, 6, 3, 4. Nice thing is this one's a little bit easier on the wallet for cash requirements. It only requires about $1,900 in cash, because I'm doing this on IRA accounts and on margin accounts. So that one should be filled. This will be for 7.2. Okay. Filled there. Almost done. Okay, and that one should be already filled for 60 cents. Oops. This one for 2 contracts. Okay. All right, so let me get this one added in. So SPX. I'll post this in the alerts. This is for April. So April 17 expiration. I'm buying the 56.25. Selling the 56.20. Selling the 5300 and buying the 52.75. So 60 cents credit. Mechanics of the trade are pretty nice. I've got about a 92% chance of profit. I've got a nice profit trap on this as well. So I've got a $5 profit trap. 92% probability of profit. There's no assignment risk here. It only requires about $1,900 in buying power. So I'll get this one posted, and this will again be in the index section of Pulver alerts. New trade. SPX 417 expiration. Buy the 56.20 put. Sell the 56.20. Oops. So I'm buying the 25, selling the 56.20, selling the 5300. Dang it. And buying the 52.75 put. About 1940 in buying power. There's no assignment risk. So there's $60 credit per contract. There is a $500 profit trap and a max risk of around 1940. Okay, so I'll build that one out. SPX. Let me build this trade. So I'll put this one here. So this is what the trade looks like. I'll post this. This will be the part that I get posted in. So let me go option leg, option leg, option leg out to April. So I'm going to do the April 17 weekly. And there's going to be 4 of these. So I've got the buy, put, sell put, buy put, all one contract. Okay, 56. Nope. 56.25 by 56.20, 5,300 by 52.75. There. So that's what the trade looks like. So pull in the credit. Oh, I got to switch these. My bad. Hang on. These are all puts. There. So I have my credit, got my profit trap. There's my risk. Take a screenshot. And this can go in the Pulver alerts. There we go. Okay, and the final piece would be the screenshot. Okay, that trades in. A lot of volatility today. Totally fine. Had about a about a $20,000 P&L swing, which is not too shabby, in my favor, which is nice. So had a bunch of trades close out for profit, which is nice after recentering. Basically, what that means is I've been taking trades where I'm selling up here, selling down here, and just a lot of indecision. And this is a lot what we talked about all through Q4 towards the end of the year, having a difficulty getting to all-time highs and just pumping through these all-time highs. Even as excited as the market was for Trump, there is tariff reality, and that's what we just dealt with over the weekend. And you can see the market opening up as is, but a lot of intraday chop, which is right here. So we'll see. I think the market probably settles in for the morning. So we have, gap lower, a little bit of volatility, and we'll see if it's just going to remain somewhat calm. But obviously, price can do what it wants to do. It could be an immediate gap fill today. Who the heck knows? And it's just another. There's a close last week, Friday. DeepSeek comes in, spends the entire week getting back to the highs. Here's a Friday. There's an open. Market's like, tariffs aren't too bad. It's like, I don't know, but expect volatility. So all I'm doing is giving myself a lot of room for error, generating income, and just trading. That's all I'm doing. All right. So anyway, those are posted. So SPX new trade today, SPY new trade today, QQQ new trade today. We also have a bunch of earnings this week, which I should have some screenshots of. This is earnings for this week. Let me try to find some notables and probably price out. So we got Palantir after close today. I have a trade in on Palantir already. PayPal has earnings. So I want to take a look at, this is going to be a busy morning. So a lot of earnings today. Dollar, gold, silver, stuff like that. I mean, that's fine. Let's take a quick peek. So let me do some top down, and then Chandler, will you let me know if I've got a guest coming on after me? If so, let me know. I'm looking at some earnings plays for this week. So we have, I think, over like almost 500 companies reporting earnings this week. I could be underestimating that, but let's go to StockTwits to find out. Okay, I'm good, thanks. So this week I think we have like 497 reporting. Let me confirm that. So we have 33, 123, 150, 163, 24, 493. All right, notables. Let me take a look also at my. All right, I'm going to try to find some liquid instruments to trade today. There we go. Okay, let's go to earnings. Oh my gosh. Freaking logins. Give me a second. There we go. Earnings calendar. So here's what I want to take a look at. So today after market, Palantir SMCI. So Palantir, I already have a trade in. SMCI, probably not really going to touch this one. You know, this stock has gone from what was outperforming NVIDIA to now, I don't even know what to say other than strikes are going to be, like, this is volatile. It could go up, it could go down. The fact it's only $27 probably makes the chains look a little bit rough. SMCI, 50 IV. I mean, I guess we have 50-cent spreads. It's reasonable, but we're only expecting like a $3 move. So it makes it pretty tough to take this trade. I think I'm just going to say no to that one. But I'm in Palantir already. Let's go to some of the more liquid stocks here for tomorrow. So we've got, I think the asterisk is going to be pre-market. So ADM, see if I recognize any of these. Pepsi, Pfizer, PayPal, Spotify, Snapchat. I do have some earnings potential on Snapchat today. Or it's tomorrow, I think. And I'm going to see if that one gets up above. Let's find out. Also, I want to put on some trades. I think IBIT. Gosh darn it. Right out of the freaking gates. So Bitcoin catching a bid this morning. Son of a biscuit. I was hoping to add another credit spread or sell some puts, which I'm totally okay doing, but let me check in a couple things here. So IBIT, I think I might just sell a put. IBIT. If I go out to April, got a bunch of shares, got a bunch of puts. That's fine. I'm going to go 50 and $1.29 right here. So all the way down to 40 bucks. 50, 45, and 40. What's that tie up for cash? Get rid of this one. 10 grand cash. That is a lot of buying power. Just that one there for, okay, I'll do this one. So for 45, it's going to sell a put. All right, filled at $1.28. That's a 4/17 expiration. 45 sell put for $1.28 credit. That is okay. So IBIT. All right, earnings. Back to earnings. Which screenshot? I don't know. I'm going to put this on another screen. I'm going to go to my screenshot where I can just pull up those logos. This might be a little bit easier for me to pull from. So today after market, Palantir I'm already in. PayPal, Spotify. Let me take a look at some of those. All right, so I'll highlight those. PayPal. Do I like any of the pricing? PayPal is, I think I got rid of this trade already. This was for profit, close for $1.82. Yep, so this one's done. We're trading at 87. I did a diagonal spread. Let me see. Let me see if I still have PayPal exposure. I closed it for profit. Do I have any PayPal exposure? Okay, so all my PayPal is officially closed up for profit. That's fine. Now let's get into the earnings discussion. PayPal, Spotify, Pfizer's going to be a low mover. PepsiCo, low mover. Ferrari maybe has some earnings if it's liquid enough. Merck, Estee Lauder, AMD could be a big one Tuesday after close. Google, so or parent company Alphabet, Snap, that's Snapchat, Chipotle. All right, there's some plays that I want to take. Definitely some plays I want to take. All right, let's go PayPal. Start out here. I'm gonna have a busy day today. I think I'm gonna throw on a handful of trades. So PayPal, we've got an IV rank of 78. That's pretty solid. We've got earnings tomorrow before the market opens. Let me take a look and see. So volatility wise, 16, 15, 9, 9, 9, 9, 11, 9, 8. Okay, I think 9 is pretty safe. What's 9% on an $87 stock? It's going to be about $7 to $8, right? So 0.09%, 87.64. We're looking at about an $8 move on PayPal. So how often do we go to at least 9%? If I want to be more conservative, I can say 8%. 0.08 times 87.62, about a $7 move. All right, so the spreads are dollar wide. I need a $7 move. That's a little much, but I can make it pretty cost effective. If we have at least a $7+ move, I can probably price that in. Now the question is, how many times do we at least go 8% over the last 10 earnings? So I'm looking for at least 7%. So it gets there day 5. Okay. Gets there day 1. Doesn't get there. Gets there immediately. Gets there day 3. Gets there immediately. Gets there immediately. Day 1. This one does not get there. This one gets there day 8, which I don't love that when it's all the way to the end. This one gets there immediately. So 1, 2, 3, 4, 5, 6, 7. 7 out of the last 10 at least gets to an 8% move. I'm going both directions on Palantir. I'm just trading the earnings itself. So PayPal is reasonable. Now the question is, do I like the strikes enough to take this trade? Now, market makers looking for about a $7 move. That's about what I'm calculating myself. I could buy the 88, buy the 87. I'm paying essentially that move. If I go 10 wide, 88 to 98 and 87 to 77. So I could pay $5.60 for what should be a $7 to $8 move. Now that gives me a tiny little sliver of profit there if I'm right. But that also means that I'm overpaying. In my opinion, I'd be overpaying where, look, my max risk here, like if price only goes like $3, $4, $5, I'm paying $560 for a price that's only moving $3 or $4. So that would immediately turn it into a loss. So I'd rather not just spend the money on the premium when I'd rather take it very cost effectively. And if I go 88, we go $7, I'm going to buy the 94 and 95. It's going to cost me 20 cents to make $80. So I spend 20 to make 80, or I spend 22 to make 78. I'm okay with that. And that's going to be roughly a $7 move. Now I can go one strike there. So now I spend 27 to make 73. That's still favorable. And let's go to the downside. I can buy the 81 by 80. So now it's essentially a 1-to-1. I don't mind this trade. I'm going to take this trade right here. So if I can get in here for less than 50 cents, if price is below 80 or price is above 94, I keep my $50. So I'm going to see if I can get in this trade for 49. Let's try this one here. Got filled for 48 cents. Okay, so the idea on that trade is it's going to be above the call side or below the put side for me to close out for profit. I get $1 credit and it costs me 48 cents. So I'm looking at about a 1-to-1 on that trade. Okay. So that is new trade on PayPal earnings. Getting this posted right now. And it's February 7th. So I'm buying the 93 call, selling the 94 call, buying the 81 put, selling the 80 put, 48 cents debit. I like that trade there. So I need price to be greater than 91, up greater than 94, or less than 80 for dollar credit and net profit. All right, so that trade is in. Okay, if anybody, I see Xavier's comments there on this stuff being complicated. This is also why I have courses, practical options. Okay, here's a class. So I've got a intro to this. Like, this is my full practical options course where I give you 13 of my favorite option strategies from trading the market bullish, bearish, or neutral. Okay, if you want a basic version just to get you started on options and the language, there is a quick options course. So if you're interested, if you buy the Pulver alerts, this is accessible, where I'm giving the $497 full practical options course as a thank you to anyone who buys the Pulver alerts. So this comes with intro, key terms, and the silly vocabulary that comes with trading options, analyzing a risk graph, looking through option chains on multiple broker platforms. There's a strategy guide walkthrough as well, trading the market bullish or bearish, either just with long options or short options or spreads. And then I do a little bit more fancy stuff like the calendar spreads, butterfly, that's including the broken wing butterfly and regular butterfly, and then strangles and iron condors. So if you're interested in this option stuff, which is what you see me trade almost every day, this is a good way to get started. So either one, you pick up the Pulver alerts and this will be included, or if you want to try something for 27 bucks, you can buy it for 27 bucks. So if you want that link, I'll post the link here for 27 bucks. It's not going to break the bank, but at least get you started, get you excited about trading some options because it's freaking awesome. If it wasn't for options, I wouldn't be as happy managing money as the way that I am the last handful of years. So I managed a currency fund for a long time and, grinded every single year and did my best. Did fine. I mean, I averaged like 18% a year in a currency fund for clients, but it was incredibly frustrating to deal with flash crashes. I mean, look what happened over the weekend, right? The dollar pairs, which Forex is like super liquid and rarely has any weekend gaps. And what have we had? Like big dollar movement. You got all this stuff where it's going to be currency wars and who's cutting and who's raising. And your stop losses are always going to be hunted because your liquidity target. Options, you have a line in the sand, and time. So if I can say by this time is price above or below, and you can either make money, you can risk money, but it's all defined, and I like that way better than the nonsense you have to deal with all the highs and lows. Okay, so anyway, if you want to check it out, it's right there, practical options. And like I said, 27 bucks is going to break the bank. If you like it, you can upgrade to the Pulver alerts and get yourself the 497 course to go with it, or you can just buy them a la carte, whatever you want. But I don't think there's any excuses. If you want to learn how to trading options, for basics, at least give yourself a starting point. But you're now trading like 4-dimensionally if you're trading options. Up, down, sideways. I trade a lot of options with rarely owning anything. I don't really own the underlines. Like even the trades I just took on PayPal, I'm not going to own that stock. It's a trade that's going to make me money or it's not. Okay, so now I'm going to mark up my screenshot here because PayPal now has a trade in. I want to go to Spotify. Spotify trading up to 550 bucks, all-time highs, I think. Very volatile stock. Can it go higher? Yeah, maybe. I don't know. But I want to price it out. So Spotify. Pretty good earnings, 14, 15, 14, 13, 13, 12, 12, 13, 14, 14. Average is 14. I'm going to go conservative and say 12. Okay. So if we go 12% on Spotify, we're trading at 549. $65 is the expected move. I need to check on the option prices. If the strikes are too wide, maybe they're $5 apart, maybe it's not a good trade. But that's a pretty big move. I mean, looking at a $65 move, take a look at the IV here. I mean, IV's at 97.5 and the stock's been just absolutely north. That's pretty wild. This is before the market opens. So if I'm going to get these trades, then I got to do it today. And then how many times do we go to at least 12%? That's what I want to find out. Post earnings, 12%. So this one, we get there at day 8. I'm not going to count that. This one, we get there immediately. This one, we are just shy of it. This one, we are not there. This one, we are not there. This one, we go to the downside. This one doesn't get there. This one does get there day 1. This one gets there day 1. This one gets there. Fudge. That's pretty classic right there. 5 out of 10 times it gets at least the expected move. So it's kind of a coin flip. Not a bad trade. But now the question is, how much do I pay for it? So if I go to Spotify through the 7th or the 14th, I can go 250. I can go 250 strikes, which aren't bad. The 7th, 250 strikes aren't bad. I'm going to go out to the 14th on this one. Can Spotify? I'm planning on a move around $65. Market makers looking at about $63 for next week and looking at about $58 for this week. So I think if I did like $60, maybe let's see what $50 price is out to be. So if I go to the upside at 5, let's go 600. So 600, if I buy the 600, it's going to cost me 57 cents to make $1.93. Like the risk reward on this is fantastic. And I'm only going up $50 instead of the calculated 60 plus dollars. So I think that's reasonable. Now I have like a bid ask that doesn't exist. That's interesting. So 55 cents there, 58 cents there. I don't know why that costs more. This one might not get me filled the way I want. So I'll try 55 cents in this one. I'm going up about $50. And this one I'm going to go down to 500. There's no, this can't be right. This bid ask is going to be really, really wide. I'll try it. I mean, I'm willing to get filled here for like $1, even up to like $1.25, because the way this trade works is if price is greater than 602.50 or price is less than 500, I'm going to make $2.50 on this trade. Now, granted, I'm going out a couple of weeks here, so this one might not be as awesome. But as long as I'm not paying over like $1, $20, $25, look, I can take a full loss on one of them, right? So if I lose on one and I lose, let's say, 60 cents, if I can draw that. So if I lose 60 cents and on the other one, I'm paying 60 cents. So I pay 60 cents, but I close that one out for $2.50. So it gives me $1.90 net. And I lose the full 60 cents here, I walk away with at least $1.30 or so. So, I mean, net profit wise, this mechanically looks pretty good. What do we need to see? We need to see price going, one way or the other directionally. So a little bit of follow through would help. Immediate follow through on Spotify would be fine. But the question is, are we getting above 600 or are we getting below 500? Well, given where we're at right now, I mean, expecting about a $60 plus move, either this thing blows up to all-time highs or starts to give a lot back because the stock is stretched quite a bit. So let's find out. I think I like this trade. I'm willing to take this trade up to not this much. That's way too expensive. If I can get this one filled for like $1.20, I might have to go one strike out a little bit farther out. 605, 602. That one might be a little bit better. Expected move. Expected move. I don't know. I'm going to try to get filled for $1. I don't know if I'm going to get this one taken in or not. Let's find out. All right. $1.10. All right, max fill is going to be $1.25. Go $1.20. $1.20 not filling. $1.25 is final offer. If I don't get it filled, then I'm not going to take the trade. $1.25 not filling. All right, so Spotify, not good enough. If I want to do something a little wild and crazy with the expensive side, then I can buy the 550, buy the 475, and then sell my wings. I'm trying to think. If I sell like the 610, so I'm going up $60, and then the 547, I'll sell the 500. I get no, the 547. Is that right? So 610, and then I go down to like 490. Okay, so here's what I don't want to do. I don't want to pay $4,000 for a trade that, yeah, it can make me $2,000, right? Like if we get a big move, sure, I can make a couple $1,000s here. That's awesome, but I'm not going to front $4,000 on this trade, especially if price doesn't move enough. So I think it's better off to not take the trade, which is unfortunate because I want to see, hypothetically, do we get above? So is it greater than 600 or is it less than 500? Because if we are greater than 600 or less than 500, I can make money on the trade. The problem is I'm not getting the spread or the mid price to fill where I want. So I might finesse this one a little bit more and see if I can find a trade. But for at least the spot check, I'm going to say no on that one. Let's go to Ferrari. So this would be race, ticker race, trading at 426. Average move around 7%, 4, 3, 3, 3, 4, 4, 4, 5, 6, and 7. Conservatively, I would say like a 4% move. 4% on a 426 stock. That's a $17 move. IV is 83. It's like, okay, so here's the good thing. IV is really high, but the bad thing is this only has monthly expirations. It's not a terrible thing, but here's what's going to make me say no to the trade. The strikes are $10 wide. There's no way this trade works. Okay, so I'd be putting up way too much capital, or just I don't have the precision that I want in the options chain. These strike prices are way too wide. So it's a no. Let's go to AMD, which is Advanced Micro Devices, trading at 73.7 IV. That's again quite high. Let's take a look at the stock here. AMD trading at 114, sitting. I'd say this is a pretty critical spot. Either we're bouncing hard off the 200 moving average or we're breaking below it. Let's see if the mechanics look okay for it. AMD. We're looking at about a 9% average. 7, 8, 9, 9, 9, 10, 8, 8, 8, 9, and 9. I'll go 9%. 0.09. Stock is trading at 114, looking at about a $10 move. IV is nice and high. AMD is after close on Tuesday, so I either go out to the 7th for a big reaction. Okay, so the 7th, what am I looking at for price movement? About a $10 move. Market makers show about a $10 move. We're trading at 114. So if I do the 123 by 24, okay, we get a $10 move. I only have to pay 23 cents to get $77. That's not too bad. And then a 104. If I buy the 105, sell the 104. Same thing, similar mechanics as PayPal. Okay, so I'll toss this in here, 45 cents perhaps. See if I can get filled for 45 cents. 47, 48. As long as it's under 50 cents, I'm okay with the trade. Got filled for 48 cents. Okay, so this is AMD earnings. If we're greater than 124 or less than 104 for a dollar credit. Okay, so AMD, I'm looking at greater than 124 or less than 104 So we'll box this one in. So 124 to 104 there. That's the trade. So I'm buying the 123 call, selling the 124, buying the 105 put, selling the 104. We're looking to see if it gets through the market maker's expected move of around $10. That's about what I calculated. How many times do we get to a 9% mover? Probably should have done this before I push, enter on the trade. But as long as we get to 9%, hopefully this is a good enough trade for the week. So we get there. We get to 8.87, not quite 9, so that one technically doesn't count. Doesn't count. Doesn't count. This one gets there. This one gets there. This one gets there. Okay, so we're 4 off, fudge. Well, we'll see. I already took the trade, but I'm 4 out of 10 times it gets to the 9% handle, and this shows. I don't know if we get a better than expected move. I mean, semiconductors, I would hope, are sensitive enough that we're going to see some volatility on it, and that's what I need. But worst case scenario is if I lose on the trade, I lose, 40. What I get filled at? 48 cents, 46 cents. Get filled for 48 cents. Okay. So let me highlight that one. So that is for AMD. Okay, let's go to Google. So another drip of Mag 7 into the markets. We're up to fresh highs on Google. I got a lot of income trades here. Let me go to the daily time frame. A lot of income trades way out of the way. Google probably going to have fine earnings. I don't know if it's going to be a big move or not. It's been kind of priced out perfections. A lot of the Mag 7s have been. Average move is around 8%. I'd say that's even on the higher side. We've got 7 and change, 8, just under 7, 6 and change, 6, 6. Yeah, I'd say like a 6 or 7% is going to be a better average than 8. So I would say even 6.5% times a 202.68. That's a $13 move on Google. I don't know if that's going to be good enough. 250 wide for a move that's going to be about 13 bucks. I'm going to pass on Google. You don't get I'm just not getting enough precision on the strikes that I want. So I'm going to say no to that. Snap, I've already got some exposure on this one. Snap is up at 11.23. I've got some naked puts on this one. If Snap has positive earnings, which I hope that it does, then I can just collect the income. But if it goes lower, I potentially have the assignment. I'm going to use that as a repair trade. 1, 2, 3, 4. That would be 400 shares at around $11. Okay, I'm going to try to repair Snap if I get assigned on it. If we get above, set this at 12 bucks. So if it gets above 12, then that's above all my strikes, which is fine. If it pushes lower, then I'm going to take some assignment and try to repair this for a few $100 bucks. So I do have some exposure there. I'm not going to take an earnings trade on Snap, but I have exposure on it. CMG is Chipotle. Chipotle trade at 58. I got a bunch of ratio spreads and naked puts on CMG. And the IV's high on a lot of these. This is pretty good. CMG. 7%, 8, 9, 8, 11, 9, 9, 10, 8, 7. 7 seems fair. $58 though. It doesn't make it super exciting for a $4 move. Probably not stoked about this trade. So it's not super expensive. $58. Can we go, $4? I'm sure we can. Can we get up to highs again at 66? Well, that'd be an $8 move. We come down to lows. That's a $10 move. So if the price has any interest in coming to this level, maybe taking a directional play on Chipotle. But again, how many times can we get to at least a 7% move? Check this, and then I think I'll wrap it up here and let you go. So how many times can we get to at least a 7% move? So let's go 8 days out. We get there. We do not. We get there. 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 Close. We get there day 8, but that's not good enough, but that's pretty good. So consistently getting to 7%, that's a good sign for Chipotle. Now the question is, what do the option chains look like? Chipotle is going to be a Tuesday after close. If we get an immediate reaction, I need a $7 move. So if I buy the 58, and I sell, let's go 10 out, I get nothing for it. If I sell 7, that'd be 65, 51. So I can pay $374 for what should be, I pay $374 for what should be a $4 move. What? That's awful. I mean, I can still make profit out of that, but man, that's a bummer. I could go a little bit tighter, pay 58 to 53, 58 to 63, 324 to make 5, like fudge it. That's just not good. Not good equity management. I'm not going to take that trade. If I go 1 strike out of the money, sell 5 wide, pay $250 to make $5, like that's a little bit better. That's a little bit better. That's a little bit better. Do I love the trade? Well, if we are only going for about $4, I'm paying $258 for about a $378 move. I mean, I can still turn this into profit. That's the good thing. I'm going to take this trade. So for hopefully 2, I doubt I'm going to fill less than the mid, but I'll find out. All right, hopefully 260 or less. I can make $5 on the trade. Let's go 260 here. Oh, you piece of crap. 261. Okay, 265 is my final offer. If I can't get filled, I'm not going to take the trade. 264. I mean, okay, it's got filled at 264. So this is a CMG earnings. I'm doing a 59 and 57. Then I'm selling the 64 and the 52. So $2.64 debit. And I'm going to try to close at 4. Well, anything. I mean, $5 is max profit, but realistically, if I can turn 264 into, 364, I'd be okay taking profit on that. So CMG, I'm looking at the 59 by 64 bull call spread and the 57 by 52 bear put spread for 264 debit. Okay, so that trade is in. So Chipotle, got some interest in that one. That should wrap me up through Tuesday. Wednesday, Uber, not bad. I'll probably look at Uber. Aflac maybe for some insurance. Eli Lilly should be pretty volatile if I could price that one out. So there's some more earnings trades I'll look at this week. All right, but I'll wrap it up here. I got to start a class in about 15 minutes, so I'll let you go. And hopefully that helps. So I'll get in PayPal, AMD, Snap, and Chipotle, add that in. I'll put that in the Pulver alerts. And I will see you back here tomorrow. Okay. Thanks, everybody. Have a good day. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.